Hey everyone, welcome back to Corporate Decoder, the place where we try to decipher the confusing world of corporate filings. And today we've got a doozy. Avalon GloboCare Corp is calling its stockholders together for an annual meeting, and it's not just about saying hello, it's about voting on the future. Think of it like a shareholder town hall, but with more paperwork and a lot less free pizza. We're diving into their proxy statement to see what is really going on behind the scenes. So what is this document all about? Well, Avalon GloboCare Corp is holding its 2025 annual meeting of stockholders, and they need your vote. They're asking shareholders to weigh in on electing directors, ratifying their accounting firm, and basically anything else that pops up. The meeting itself is going to be all online, which is pretty standard these days. First up, they need to elect 6 people to their board of directors. These are the folks who guide the company's big decisions. They've put forward some existing directors for re-election, but excitingly, one director, Dr. David Jin, who is also the chief executive officer, is stepping down due to personal health issues on the 30th of November, 2025. The company is already looking for a replacement director. It's important to remember that directors are elected by a plurality of votes, meaning the ones with the most votes win, even if they don't get a majority. Let's take a quick look at the nominees. We have Wenjiao Liu, who is the chairman of the board, with a background in healthcare entrepreneurship in both the US and Asia. Then Therese Lodz Felix, who brings a wealth of experience in capital markets and finance, currently serving as CEO of Biocorps Inc. Stephen Sanders, a lawyer with extensive experience in corporate and securities law, is also nominated. William Stilley III, a former US Marine captain with significant experience in the biotechnology industry and finance, is up for re-election. Wilbert Torsen II, a former congressman and CEO of a pharmaceutical trade group, adds a unique perspective. And finally, Tavi Troy, who has served in high-level positions in the US Department of Health and Human Services, offers deep healthcare industry knowledge. The company believes this mix of experience is crucial for the board's effectiveness. Now, the company is also touching on its corporate governance. They say they don't have a formal policy on board diversity, but they prioritize professional accomplishment and the ability to collaborate. They also mention that their chairman and CEO roles are separate, which they believe is good for oversight. The board meets regularly, and last year they got together 5 times. Interestingly, if brokers haven't received instructions from beneficial owners, they might not be able to vote on certain non-routine matters like director elections. So, if you own shares through a broker, make sure you tell them how you want to vote your shares. Let's talk about the folks running the show day to day. The table here lists the executive officers. Dr. David Jin, the CEO, is mentioned as stepping down, and Meng Li, the current Chief Operating Officer, will take over as interim CEO. Luisa Ingagiola is the Chief Financial Officer. These are the key players. The information here gives us a snapshot of who is in charge, and it's important to note the leadership transition happening with Dr. Jin's departure. Alright, let's get to the juicy part for many of you: compensation. For the year 2024, Dr. David Jin, as CEO, had a salary of $180,000. Luisa Ingagiola, the CFO, earned a salary of $350,000 in 2024. Meng Li, the co-2, had a salary of $205,471 in 2024. Now, it's important to see that these are primarily base salaries with no reported stock awards, option awards, or incentive plan compensation in these specific figures for 2024. This suggests a compensation structure heavily weighted towards fixed pay rather than performance. Based incentives for this period. Remember, Dr. Jin is resigning and Meng Li is stepping into an interim CEO role, so future compensation packages might look different. This next table, the pay versus performance table, is pretty interesting. It tries to link what the executives are paid to how the company actually performed. For 2024, the CEO's compensation was $180,000, and the average compensation for the other named executive officers was about $175,000 when adjusted for compensation actually paid. However, look at the company's performance. The net loss for 2024 was over $7.9 million, and for 2023, the CEO's compensation was $330,000, with other executives averaging around $315,000, while the net loss was a staggering $16.7 million. The report states there is a limited relationship between compensation actually paid and the company's performance measures like total shareholder return or net loss. This implies that executive pay, at least in this snapshot, was largely fixed and not tied to the company's financial ups and downs, which is a common point of discussion for investors. Now let's look at the compensation for the directors who are not actually running the company day to day. For 2024, Wenjiao Liu, the chairman, received $100,000 in cash. Lodz Felix, Stephen Sanders, and William Stilley III each received $70,000 in cash. along with a small amount for stock options valued at around $2,700. Wilbert Tozen II received $25,000 in cash and options valued at about $4,700, while TV Troy got $60,000 in cash and options worth about $2,700. This shows a clear cash component for director services with some equity awards for certain members. And it's good to see they are getting some form of compensation for their time and expertise. The audit committee has reviewed everything with the company's independent public accounting firm, MIAMP KCPA's PLC. They've discussed the financial statements and auditor independence. This is a standard but crucial part of the report, ensuring that the financial picture presented is reviewed by external eyes. This brings us to proposal number 2, where they're asking stockholders to ratify the appointment of AMP CPAs, PLC as their independent accounting firm for 2025. They note that AMP handled the 2024 audit, while Markham LLP was the firm in 2023. The audit committee is responsible for this appointment, but they're seeking stockholder approval. The fees for AMP in 2024 were $137,000 for audit fees, a significant decrease from the $287,244 Markham LLP billed in 2023 for audit fees. This change in auditors and the associated fees could be a point of interest for investors. This section on transactions with related persons is always a good place to find a bit of drama. It details any deals between the company and its directors, officers, or major shareholders. The company leases space to DP Capital Investments LLC, which is controlled by Chairman Wenjiao Lu. The related party rental revenue was $50,400 for 2024. Which looks reasonable. Then there is consultant services provided by Director Wilbert Tozen II and his son, costing $63,644 in 2024. They also mention a loan line of credit from Mr. Lu, which appears to have been fully repaid by the end of 2024. There was also a membership interest purchase agreement with Mr. Lu for a subsidiary, with payments received as of December 2024. These transactions are important to scrutinize to ensure they are on fair terms for the company. Finally, they address any stockholder proposals for future meetings. For proposals to be included in their 2026 proxy materials, they need to be received by the 17th of July 2026. For nominations or other business to be brought up at the meeting, notice needs to be given between the 1st of September 2026 and the 1st of October 2026. This is essentially their way of saying, if you want to bring something to our annual meeting, here is when you need to tell us. So, what's the big picture here? Avalon GloboCare Corp is holding its annual meeting to get stockholder approval on director elections and auditor appointments. We see a leadership transition with the CEO stepping down and a co-o stepping in as interim CEO. Compensation appears to be heavily weighted towards fixed salaries with limited performance-based incentives evident in the summary compensation table for the past 2 years. The company's financial performance, as indicated by net losses, does not seem strongly linked to executive compensation in the provided data. We also see the usual related party transactions that require careful review. Looking at their direction, the company is navigating a leadership change at the CEO level, which always presents a mix of risk and opportunity. The financial performance, marked by significant net losses in recent years, coupled with the described compensation structure, raises questions about alignment between executive pay and company performance. However, the efforts to secure independent audits and corporate governance practices are positive steps toward transparency. The main risk I see is continuing profitability challenges and potential investor concern over the lack of clear correlation between executive pay and company performance metrics in the pay versus performance section. The opportunity lies in a successful transition to new leadership and a clear strategy to improve financial results. In conclusion, Avalon GloboCare Corp is at a transitional point with a new interim CEO and ongoing efforts to strengthen its board and financial oversight. Investors will want to watch closely how the new leadership steers the company and whether its financial performance can improve significantly. Alright, that is our breakdown of Avalon GloboCare Corp's latest proxy filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.